Hello guys, you're welcome to my video on the Doji Candlestick. So basically in this video we are going to be discussing how to identify the Doji Candlestick pattern and how to use the Doji Candlestick pattern to make your trading decisions. Now the Doji pattern is usually representing indecision in the market. It is a period of time where buyers and sellers are struggling to gain momentum. So it is now reflected in the candlestick. The doji candlestick is such that has a small body and long shadow or long wick. It has a small body and long wicks. Okay, for example, we can just quickly identify different doji candlesticks on this chart. Now, this is a doji candlestick because it has a small body and long wicks. This is another doji. As you can see, there was indecision in the market. There was indecision in the market. The indecision continued before price finally found its way. So the doji is usually um, used to know whether price is about to reverse. It can show potential reversal zones. Whenever you see a doji show up in the market, it is a sign that the price could reverse, or if the direction of the trend should continue. For example, this was a bullish trend. It was a bullish move. Remember that this represented indecision between the bulls and the bears. Okay, so at this point, we wouldn't have been sure whether the price would continue upwards or reverse downwards. So all we will just have in mind is if the bulls prevail, then the price will move upwards. However, if the bears prevail, then a reversal will set in. So whenever you see the doji candlestick pattern, you may want to wait for a breakout to happen first, either in the direction of the trend, after which you can then enter a buy position, or downwards against the trend, which shows that perhaps the price has reversed or has begun a reversal, after which you can then enter a sell trade. Now, we can see that there was another doji here, a period of indecision, and right after the bulls prevailed, we can see that price rallied upwards for a while, and then another doji formed, which showed an indecision again. In this case, price reversed. So a key point to note is whenever you see a doji, the price could either reverse or continue in the direction of the trend. However, it is usually advisable to wait for the continuation either in the direction of the trend or a reversal against the trend before you open your position or before you take a trade. Now we have different types of doji. We have the standard doji, which we can see around here. This is a standard doji. This is another standard doji. The standard doji is usually represented by a candle that has the body in between. For example, we can see this is another standard doji. We can see that the body of the candle is somewhat in the middle. It's in the middle. The open price and the close price are not far from each other. The body is in the middle of the candle. That is the standard doji. And then we have the long-legged doji. The long-legged doji is the ones that have long legs or long wicks. So this is a long-legged doji. We can see that this doji here and this doji here, the wicks aren't too long compared to the size of the body. But this doji here has a very long wick. So this is a long-legged doji here. Irrespective of the kind of doji, one common feature amongst all the dojis is that the body of the candle is always small. The body of the candle is always small. It's always small. The close price and the open price are always close to each other. We can see this is another doji. We can see this is another doji. The close price and the open price are always close to each other. Now we have been able to identify a standard doji. We have been able to identify a long legs doji. Another kind of doji we have is the dragonfly doji. The dragonfly doji is the one that has the body on the upper side of the candle while the wick runs down. Let us see if we can identify a dragonfly doji. Okay, let us see if we can identify one, just one. Um, okay, we can use this as a dragonfly doji. You can see that the body the body is on the upper side. It is close to the high. It is close to the high. In order not to take too much time, let us just use this example. There are other dragonfly dojis that has the body very close to the high of the candle. However, I think this can also serve as a dragonfly doji. This is another dragonfly doji here. You can see that the body of the candle is very close to the high of that candle. Usually, the dragonfly doji usually it represents that a bullish move is about to happen. The Dragonfly Doji serves as a reversal signal that shows that a bullish move is about to happen. Dragonfly Doji usually happens right after a sell move. As you can see, this was a sell move before the Dragonfly Doji happens, and it's a reversal signal that shows that a bullish move is about to happen. At this point again, the Dragonfly Doji occurred right after a sell move, and it indicated that a bullish move is about to happen. Now, while the standard Doji represents indecision, in which you are not sure whether the bulls or the bears will prevail, the long legs Doji basically can also represent indecision because the body of the candle might not be at the extreme up or the extreme bottom. So depending on where the body of the candle is, then you will know if it is a bullish reversal or a bearish reversal. However, the Dragonfly Doji is specifically bullish because the body is at the upper part of the candle and it always occurs after a sell move and it indicates that a bullish move is about to happen. Now, the next one that we have on our list is the Gravestone Doji. Now, the Gravestone Doji is the opposite of the Dragonfly Doji. The Gravestone Doji has the body of the doji at the bottom or close to the bottom of the candle. This is a gravestone doji. Now, the gravestone doji usually occurs after a bullish move, and it represents uh, a signal that a bearish move is about to happen. So we always find the gravestone doji right after a bullish move and before the commencement of a bearish move. So basically, these are the main types of dojis that we have. main types of the Doji candlestick pattern: the standard Doji, the long legged Doji, the Dragonfly Doji, and the Gravestone Doji. These are easily identifiable on your chart, and these are among the most common kinds of doji. So whenever you see the standard doji, just bear in mind that there is indecision in the market, and in that situation it is advisable to wait for a breakout to happen, and then you enter your trade in the direction of the breakout. When you see the long leg doji, you can use the same strategy you used for the standard doji, because it just shows that there was a longer period of indecision as a result of the longer wicks. However, if the body of the long leg doji is on the upper part, then it signifies that a bullish move is about to happen, which means that long leg doji is likely going to be a dragonfly doji. But the long leg doji, remember, can have the body on any part of the candle. The long leg doji can have the body on any part of the candle. It could be up, it could be at the bottom, it could be at the middle. But the dragonfly doji specifically has the body at the top, and it represents a bearish end. It shows that a bearish move is about to end and a bullish move is about to start. And the last that we had on our list, being the Gravestone Doji, shows that a bearish move is about to end and a bullish move is about to start. So we have been able to identify the main types of doji candlestick patterns that we have and how to use them to identify what trades to take. Because whenever you see a dragonfly doji, for example, you should be looking out for buy trades. Whenever you see a gravestone doji, for example, you should be looking out for sell trades. Whenever you see the standard doji, you should be waiting for a breakout before you open your trade in the direction of the breakout. Whenever you see the long legs doji, if the body is around the middle, you should wait for a breakout. If the body is at the top or at the upper part of the candlestick, you should be waiting for a buy trade. If the body is on the lower part, you should be looking for a sell trade. So I hope you found this video insightful, and if you did, kindly hit the like button, subscribe, and click the notification bell so that you will get updated on subsequent videos. Cheers guys, and happy trading.